Oil cartel OPEC meeting today in a virtual gathering with some very real-world consequences. Under a previous agreement, the group had planned to raise production this coming January by nearly 2 million barrels a day. But with COVID cases surging, the threat of economic lockdowns in the U.S. and Europe, a huge risk factor, OPEC may have to change course. But will all the members agree to do that? That is the question in the morning. And with the answer is Brian Sullivan with more on all of it. Brian.
Hey, Andrew, good morning. Yeah, listen, arguably today, this virtual OPEC meeting is the most important meeting that the group has had since spring, right? Investors, they've been in a red-hot oil and gas stock space the last couple of months, and they are going to be watching what OPEC does very, very closely. Now, as you laid out, there is a pre-plan to raise output by cutting back the cuts. You cut the cuts, you raise the output. So really, if you're an investor, here are the 4 scenarios you need to know. The most bullish, meaning prices going up, is that the current deal for cuts of 1.9 million barrels a day is not only extended by 3 months, but extended more than 3 months. What is built into the market, guys, lately is that the current deal will be extended for 3 more months, January, February, March. A bearish scenario is there is no extension of cuts, that they just allow it to roll off come January 1st, and they raise production. And the most bearish, highly unlikely, but it's out there, is that there is not only no deal, but they walk away kind of like they did in March. You have an OPEC breakdown, perhaps, and a price and market share war. Now, what about March? You might remember, I know it seems like 16 centuries ago, but what happened in March is no doubt fresh on the minds of OPEC. They could not get a deal. Prices fell 30%. Then you had COVID really hit. Then you had prices go negative. That's that spike down there in the middle of April as well. If there is no deal, it's going to be bad news for American producers who need the price of oil to stay, if not where it is, they'd like it higher, but they need it over $40. Now, after a horrible year, many energy stocks have caught fire over the last 3 or 4 weeks. Look at some of these returns, guys. Occidental up 81%, Apache 68, Diamondback 67, Fang outperforming Fang. Now, all that pricing is built into the concept, guys, that we will get an extension of the current cuts by 3 months. If we don't get back and get that, some of those gains could certainly come back down to earth in what has been a wild month. You mentioned the vaccines. Well, here's the story. It's all about global demand, right? Getting back to normal. China pretty much is back to normal. We're looking at the traffic indexes in Beijing and Shanghai. You could see blue and red, no difference year over year. They need the U.S. and Europe to get back to normal fast, and that Moderna news might help that.
Shepard Smith here. Thanks for watching CNBC on YouTube.